Hello and welcome. My name is Sai, the indicator. I'm a technical analyst, and welcome to the Indicator Times. Right, so there's usually a few signs that we get from any market about which part of the cycle that it's in, and in this case, I'm going to show you. I'm going to really quickly run through 9 signs that we saw previously that are kind of like in the market right now. So this will help a lot of people who are just solely looking at a market from one direction. It's not always good to look at market from one direction. It's always good to look at a balanced overview or balanced view and have an overview of the bullish market and the bearish market cycle so that it helps you make better decisions. Right. So in this video, I'm just really gonna quickly dive into what are the signs that we saw previously and what are they doing right now, or what are we seeing right now in the same market, and how can that help us gather information on what to do in the market today. So if you haven't subscribed to this channel, please make sure you subscribe to this channel, smash that like and ring that notification bell, and that's gonna really help this channel so that we could grow together. And there's a ton of ideas that I'm looking to accomplish in this short time in the near future. So basically, what I'm looking to do is just help me through, and let's help each other grow together, grow this network and this channel together. Right. So there's going to be amazing content coming through. And if you're not following me on TradingView, please make sure you follow me on TradingView. I also do send out some commentary and I do share some charts once in a while. I think the last chart, if you go to my TradingView, actually looking at my TradingView right now, if you go to my TradingView, the last time I shared a chart was on the 16th of May. And on the 16th of May, I shared a Bitcoin chart, which I will kind of briefly run through. And I'll also share I think on the 18th of May, I'm just actually gathering my thoughts together because I'm distracted by the two posts. I'm trying to think about the chronology of which came first. Right. So on the 16th of May, I actually posted about the Bitcoin chart when it was still above the trend line and still above 40,000, and I saw a few things that that could help a lot of other people. So if you want consistently updated charts, you could go to my trading view, and I do update it. And I think on the 18th of May was when I made an update of the same chart. Right. So, but it was just a follow up. It was just an addition to what I already saw 2 days the before the previous update, or the previous uh, chart that I sent through to TradingView. Right. So you want to join me there? If I can just quickly take you through to my TradingView so you could see what it kind of looks like and stuff like that. So the previous post that I'm talking about of May 16th was BTC to 41K, and the follow-up was 42. Will it hold the 42K support? And it actually broke through that. But let me just quickly show you a really cool feature, because this is one interesting little thing that when I share my charts, you can actually get to see uh, the previous, the before, and the after. Right. So if you open the trading view and go to the exact chart that you're looking for, whenever, depending on when I posted it, you actually see a play button over there. You could just literally click on that play button. You can actually see the before and the after. When you click on the play, it's actually going to show you the after, or up until the existing market, or where the market is right now. So also in the comments, because I do like kind of run through my thought process, what I think at that point, I do run it through and I post everything that I think is going to happen in that market, and I give a balanced view between scenarios. So that's also another little thing that you could go and have a look at there on my trading view. So if you don't have trading view, you could also register trading view. I think I'll leave all the links in the description below so that you could just quickly click and go straight to trading view and go straight to my account, and you could quickly just register there. Right. So this is the chart that I shared then, and basically I updated it a bit, but I still haven't posted it. I still haven't shared it, so I haven't updated the new chart onto my trading view, even though I've been monitoring this chart for as long as May. I think that I did that in May. Right. So I just wanted to quickly talk about that. Now we can get into the previous, diagnosis. I think what we're going to be doing is more a diagnosis. So if you are looking to buy or to sell any instrument, it's always important to look at both views of the buyers and the sellers before you make a decision. I think for good practice sake, it kind of helps. It kind of helps you the individual, remove your own personal agenda out of the market, to remove your own personal thoughts around the market and just say, look, I'm going to have an objective view. And this objective view is going to help me make decisions, wiser decisions for that matter. So it's just a little trick that I learned over the years. And that's going to help quite a lot of people get understanding of what a market looks like, and which cycle, and within the cycles, what happens within the cycles. But I'm going to sample it quickly with the previous cycle. So just a quick run overview. I'm not going to be doing an in-depth view of what's going on and what happened previously. I'm just going to run through so that you could really get an idea of what happened in the past and how can we use what happened in the past help us make decisions today. Right, so this is a chart. As I dive into the charts quickly, so we could see the big impulse wave that started in March 2020 and started running like wildfire, caught wildfire somewhere also earlier this year, especially when it broke through the 20,000 resistance, which it made in 2017, December 2017. So when that happened, there was a ton of people that were looking at, Wyckoff distribution models and so forth, but there was quite a lot of people that were experts that are not experts today. I don't know why. When things are flying, there's always an expert, and when things aren't looking bad, the experts kind of disappear out of the market, right? So I'm going to be that guy that just gives it as it is, tells it as it is. I'm not going to be looking at different semantics, or I'm not going to be looking at how people feel, but I'm going to be looking at an objective view of charts and what I know and what I've applied over the years, just so that I could give a more balanced view of this market at the moment. Right. So when Bitcoin did that, it went to the top. They started talking about a Wyckoff distribution model. Now, it's a little bit of a complicated model if you are new to trading, and especially if you're a beginner or if you're still learning how to read charts. It's a bit of a complicated model. I'm not going to get into the lessons behind it, but that's the one thing that a lot of people started bragging about. They became Wyckoff experts, and the other simple things were missed in between. Just a simple rising wedge, which is what you see on the charts in the blue, which was also one sign. The minute you see a rising wedge, that kind of really gives you a sign. It's a part of a diagnosis. What part of the cycle of a market are we in right now when you see that? Right, so it kind of seems like I'm offline. Now that's very sad. Right, anyway, I'm just gonna carry on and see if um I can still continue through with this. All right, so that was the cycle then. And the other diagnosis that we look at is, once we see the rising wedge and we see that the market is, doing higher highs, but it's not really pushing a lot of momentum and so forth, then the only other diagnosis that we can only check is within the pattern, how many waves is it making and so forth. And it's very easy to just quickly dive in and, look at an easy 5-wave drive. If you are an Elliotician, if you use Elliott waves, you're going to be checking out 5-wave drives. Let me just extend this because okay, let me redraw that again. Right, so we're going to be looking at very easy 5-wave drive, which also kind of symbolizes oh man. Right. Okay. Okay, great stuff. So I'm back. I'm back. Sorry. Okay, so we're going to be looking at a simple 5-wave drive. 5-wave drive basically just simply means that, we are in a market that's kind of looking like it's going to reverse, and it's a very common pattern. Why did it draw it so funny? Why did my number 4 not go where it's supposed to be? Okay, let me do this. Let me pull my number 5. And yeah, there's 4. So that's the 5-wave drive. So within the rising wedge, we saw the 5-wave drive. I'm not going to talk about the Wyckoff thing because it can confuse you. So the 5-wave drive was another symptom that we looked at right there. So if you're an elitician, you look at the 5-wave drive. If you are also a price action, you could look at the 5-wave drive as a potential reversal point. And now we're also gonna say, in this wedge, there's usually another sign called MACD. The MACD is just a very simple indicator that is a moving average convergence and divergence. So like it says in its name, there is convergence or divergence. So you could easily use that to identify divergences and convergences, because its power is to identify those. It's got a superpower called I know how to uh, identify convergences and divergences. So that's basically the divergence there that took place in May, runabout even before May. But the pattern was there, the signs were there. I'm just quickly running through the signs and symptoms. So that was one of the signs over there. And I'm going to use the RSI. I see there is a lot of common use for this divergence identification, even though it's really about the strength between bulls and bears, the strength between buyers and sellers. How strong are they within a particular market? It's really applicable for that purpose. But I see in most cases it does sometimes overlap, and a lot of people tend to use it for convergences and divergences. So I'm just going to look at those points. I'm really interested in the highs. That's what's happening with the highs, right? So I'm not seeing a convergence or divergence on this time frame. Oh, I'm back online. So if I go to my daily chart, I will actually find that convergence and divergence on the chart, right? So as I suspected, actually, there would be the convergence and the divergence that we would have expected right there. So I'm looking at this high of 135, the 135 waves. And the 135 waves, there is the divergence there. All right, so it's very common for people to use the RSI as well and find divergences and convergences. So this is basically just what it is. So that is another sign that things were looking good. And if you use your stochastic RSI, and if you check your wave 135, you actually notice that either your stochastic was either very overbought, just above 80, which was a sign also to say, look, in these levels with those divergences, there was a high probability of a market of sellers coming in and diving in and so forth. So wave 5 was the most successful one. And that was just looking at another diagnosis right there. So we just diagnosis. In this overview, I'm just showing you how to check when things are very optimistic and when things are very pessimistic. Especially in a bullish market or in an upward moving market. You want to know when it sounds too optimistic. You also want to start doing this process, because this process will help you get an objective overview. You can't just say this market is just going to fly, it's going to go to 100k and so forth. It doesn't just go straight to 100k. When it gets to certain levels, there will be corrections, and corrections are good. Corrections are important, and they are very healthy. We need corrections in any market and so forth. So these were some of the signs there. I don't know if I've missed anything, but that was the thought process around diagnosing that part of the market. So now we're going to go and diagnose the existing market or the current market. And I'm going to have to now switch back uh, to the 4-hour chart quickly, so that we can quickly run through what I'm also seeing, which was quite common in the first phase or in the first run of the year, in the first, I think, Q1, Q2 run about there. When that happened, I think Q1 and halfway through Q2 of the year. So now we are in this cycle that started in June. This bullish cycle that started around about June. Let me delete a few things here so that I can just clear up the charts. I'm gonna get rid of the indicators, because I just wanted to quickly show you how to also diagnose using that. Right, so I'm gonna remove that, and that's what the charts look like right now. I'm just gonna zoom into this little section that started around about July of this year up until now. Right, so what we saw previously can potentially happen, and it can potentially cause a correction. And if it does cause a correction, how deep would the correction be? And that's really the kind of answers that I'm looking for right now by doing this diagnosis. Right, so we're gonna look at the market that is still below the trend line that it broke. This trend line here that I've just shown you, that I've just drawn there, the black trend line. Right, so the market is still pretty much trailing below the trend line. which still says, we're still kind of like in the bearish cycle of this correction, because this market from 6,500 to all the way to 30,000 was a correction of the large impulse wave that started at 3,500 in March 2017. I mean, March, yeah, when was it? March 2020 up until now. So that long impulse wave from 3,500 to 6,500 needed a break, took a break from 6,500 all the way to 30,000. And that is the cycle. So right now we're in a correction of a correction. So I'm expecting that we could see a correction of this corrective pattern. Right. So now quickly diving in. Now we are still below the trend line, which says we are still bears. So at what point would we be interested in looking at potential bullish buys? Is either we're going to be looking at a market that we're buying higher, or we're going to be buying lower. A market is very interesting. There's always three decisions that you can take. You can either buy, you can either sell, or you can either wait. The third one is very uncommon. It's never taught. You will almost never find it anywhere. And that is because a lot of people always think, you jump into a market just to buy and sell, but not considering the fact that, even waiting is a decision. It could be a very profitable decision that you could take, right? So also consider that as a by the way, or as a for your information, right? So sign number one is we just diagnose the fact that it's still in a bearish market of this correction. And two is, why does it seem like the market, I'm using the wrong tool over there. Right, so we have this now, this cycle. Let me change the color so that we could make it look like the big wave over there. So I'm gonna change its color from that to blue. Right, so there seems to be now the similar pattern that took place on, just give me one sec, a little bit distracted. Right, so there seems to be a pattern that's taking place. You can see now we have a rising wedge thing, and the Wyckoff people are not even here, because now once you have a wedge like this, that's where also Wyckoff kind of kicks in, what a distribution model, right? So just looking at this short impulse wave from 30,000 up until where the price is now at 51,000 or so. I'm looking at that short wave and I'm trying to diagnose what is happening there. What is the opposite side of the market looking to do? What are they thinking? Are they going to short? Are they going to, give up? And if they're going to give up, then what's going to happen? Let's start with the giving up scenario. So if the bears give up and say we're no longer interested in this market, then the bulls are pretty much simply going to break through this trend line and come back and test it and continue their bullish run. It's that simple. So at what point are we interested? Would I be interested with my system, with my diagnosis like this? At what point would I be interested is if I see a market that breaks through this trend line and really cancels the wedge as well, and cancels the divergences and stuff like that we're going to show. I'm going to show you in these waves now, in these short waves that are happening. If anything like this happens, then I'd be very interested. If it breaks through, comes back and does a retest, I would pretty much be comfortable buying around 54,000 and 51,000. If it comes back there again, 54,000 will be the range. So that is a very quick one to understand. Now, if that doesn't happen and the bears are like, look, this is our time, we're going to dominate and so forth, then what are they going to do? What is their thinking process like? Right, so they're already seeing the wedge. Great stuff. Are they seeing a 5-wave drive? Possibly. So if I draw this, then there's their 5-wave drive pattern that they are potentially looking at. Right, so now they're already seeing two things: the wedge, Wyckoff, actually three, and the 5-wave drive. Three things now that are giving them a bit of confidence to say, well, there's a potential of shorting this market. Right. Then after seeing this, then what are they saying? What is MACD saying? Or what is, either we're going to find a divergence on MACD, or we're going to find it with RSI, or we're going to find it on both. Right. I think as you can already see on the charts already, that 5-wave cycle, there's the bearish thing. There's the divergence right there taking place. Another note. Take note that already the price is just above the, at this point here, is just above the trend line, especially on the MACD. So the MACD is seemingly having broken out of that cycle over there. Now take note of that because it's quite important. And that having broken out, but it still hasn't broken the higher high, the previous high of the MACD. We are still below that, so it's still kind of like I would still say we are still within that divergence, which gives that indication that we are still potentially going there. We're still potentially gonna go to the south of the market. So I'm gonna get rid of this, and I'm gonna quickly jump into your stochastic. No, stochastic RSI. Right, I'll start there. Right, your stochastic RSI is stochastic or stochastic RSI is the same thing. It's already out of the woods, out of the overbought zone. But as if you even if you were to use the stochastic, it'll actually be at the same position, around about just up there. So chances are, yes, the market is looking at a potential selling anywhere there. Right, that's another thing to note. And I'm gonna quickly check if we're gonna find a divergence on this one. All right, so the divergence on the RSI on 4 hours has been cancelled because the market is now overbought. Right, so that's one sign that's already different to the others previously happened. Right. So what are we potentially looking at right now in this market as it looks at as we've just diagnosed right now? So you have a market that is similar, that has similar characteristics as a uh, May cycle that took place that reversed the market. So if this market, let's say for instance, this rising wedge passes, what are the potentials of that? Uh, of that, what would be the impact of that? Right. So it could move the price from wherever it is to potentially around the 40,000 because that's the previous pricing that was resistance. Now it's going to be support. It will just be simply support. So there's two simple scenarios now to conclude this. You either gonna buy higher if it breaks back into the the trend line, or you're gonna buy lower. And if you buy lower, that's a better principle. And it just simply means by me seeing this, am I gonna be able? Would I be shorting? I'm not a margin trader on this in this market, so I wouldn't even short it even if I was. But now, what decision do I have to make? There's either buying, selling, or waiting. For me, right now, is just making sure I could wait. My decision is just simply wait. Wait for the market to either get to 40,000 and see what the reaction is there, or wait for the market to break and through and cancel the wedge and the 5 wave drives on all those bearish sentiments that I'm seeing there, because all those things are very important for us to know. And I hope this was very interesting for you to kind of understand what kind of market cycles are out there. And just as a bonus, I'm just gonna quickly uh, run through one final system which I think is quite important to have a look at before I finish this video. Right, I'm gonna remove that RSI over there, and I'm gonna drop the fib onto the charts. So where's the market struggling? The market is actually struggling at a 61.8 level of the Fibonacci tool, which is another sign, which is another very good sign that, just as a bonus, you could see that there's a lot of confluence at one place. And this is what I really love to see. Now, the decision is you just wait. Well, I would wait. I wouldn't do anything at this point. Right. So I hope you enjoyed this video, and I'm going to try and create shorter versions of this so that, we could run through it quickly. But at the same time, I'm hoping it was very helpful for you to be able to understand that, it's better to do opposition analysis and understand and allow that to help you make better decisions. So that what I've just done is everything I do every time I look at a chart, because I help myself by looking at a balanced view. I want to know what the buyers are thinking. I want to know what the sellers are thinking. And then once I have an idea of the both, then they help me understand what I can do. I don't go in a market and say, this is what I want to do. I want to buy or I want to sell, but I allow the charts to give me the process of how to get there. And I think that could be very helpful. And if this video was very helpful for you, please smash that like. Remember to subscribe to the channel, and make sure you ring that notification bell so that you could always get my content every time I post on the indicated times. Thank you so much, and I'll see you.